What is the primary goal of RBI's monetary policy? A. To achieve specific economic objectives. To promote the development of financial markets. To maintain financial stability. To regulate the payment and settlement system. Answer. A. To achieve specific economic objectives. What are the various functions undertaken by RBI in the financial sector of the country? Monetary authority, issuer of currency, banker to banks, and manager of foreign exchange. Regulator of the banking system, manager of foreign exchange, and developmental role. Issuer of currency, banker and debt manager in the government, and regulator of the payment and settlement system. All of the above. Answer. D. All of the above. Which of the following is not a function undertaken by RBI? A. Regulator and supervisor of the payment and settlement system. Manager of foreign exchange. Promoting the development of financial markets and systems. None of the above. Answer. D. None of the above. What is the role of RBI as a banker to banks? A. Issuing currency. Maintaining financial stability. Regulating the banking system. Providing financial assistance to banks. Answer. D. Providing financial assistance to banks. What is the objective of RBI's monetary policy? A. Maintaining financial stability. Controlling inflation. Promoting export growth. All of the above. Answer. A. Which indicators does RBI use to monitor and analyze economic trends? Interest rates. Inflation rate. Money supply. All of the above. Answer. D. What are the direct and indirect instruments used by RBI to implement monetary policy? Direct, open market operations. Indirect, fiscal policy. Direct, fiscal policy. Indirect, interest rate adjustments. Direct, interest rate adjustments. Indirect, open market operations. Direct, none. Indirect, money supply control. Answer. C. What is the role of adequate flow of credit in the economy according to the statement? Promote economic growth. Control inflation. Reduce fiscal deficit. None of the above. Answer. A. What is the main objective of RBI's framework based on multiple indicators? To monitor and analyze economic trends. To regulate the stock market. To control international trade. To promote social welfare. Answer. A. When was the Monetary Policy Committee, MPC, established? 2014, 2015, 2016, 2017. Answer. Circa 2016. What is the main role of the MPC? To determine fiscal policy. To determine the exchange rate. To determine the policy interest rate to achieve the government's inflation target. Answer. C. To determine the policy interest rate to achieve the government's inflation target. How many members are appointed by the central government to the MPC? 1, 2, 3, 4. Answer. C3. What does CRR stand for? A. Capital risk ratio. Cash reserve ratio. Credit rating requirement. Current ratio. Answer. B. Cash reserve ratio. What does SLR stand for? Systematic liquidity ratio. Securities lending ratio. Statutory liquidity ratio. Securities listing requirement. Answer. C. Statutory liquidity ratio. What is the purpose of CRR? To maintain the quality of assets held by banks. To regulate the credit risk taken by banks. To regulate the liquidity of banks. To regulate the profitability of banks. Answer. C. To regulate the liquidity of banks. What is the purpose of SLR? To maintain the quality of assets held by banks. To regulate the credit risk taken by banks. To regulate the liquidity of banks. To regulate the profitability of banks. Answer. A. To maintain the quality of assets held by banks. What is the purpose of LAF? To regulate the credit risk taken by banks. To regulate the profitability of banks. To regulate the liquidity of banks. To regulate the capital adequacy of banks. Answer. C. To regulate the liquidity of banks. What is LAF repo rate? The rate at which RBI borrows from banks. The rate at which banks borrow from RBI by pledging government securities. The rate at which banks lend to other banks. Answer. B. What is the repo rate used for? Long-term money market interest rates. Transmitting policy rates in other segments of the financial market. Managing the level of liquidity over the medium term. All of the above. Answer. B. What is open market operation, OMO, used for? Managing the level of liquidity over the medium term. Transmitting policy rates in other segments of the financial market. Determining short-term money market interest rates. None of the above. Answer. A. What is the maximum amount that scheduled commercial banks can borrow under the Marginal Standing Facility, MSF, and Standing Deposit Facility, SDF? 10% of their respective NDTLs. 25% of their respective NDTLs. 50% of their respective NDTLs. 100% of their respective NDTLs. Answer. B. At what rate can scheduled commercial banks borrow under the Marginal Standing Facility, MSF? 100 basis points below the policy repo rate. 100 basis points above the policy repo rate. 50 basis points below the policy repo rate. 50 basis points above the policy repo rate. Answer. B. What is a Standing Deposit Facility, SDF? A tool to manage the level of liquidity over the medium term. A facility that allows scheduled commercial banks to borrow from the RBI. A facility that allows scheduled commercial banks to deposit excess funds with the RBI. None of the above. Answer. What is the purpose of the Market Stabilization Scheme, MSS? To issue treasury bills and dated securities below the normal market borrowing program. To absorb excess liquidity in the market. To increase liquidity in the market. To stabilize the stock market. Answer. B. To absorb excess liquidity in the market. When was the Market Stabilization Scheme introduced? 2002, 2004, 2006. Answer. B. 2004. What are the cap and floor rates in the Market Stabilization Scheme? Cap for treasury bills and floor for dated securities. Cap for dated securities and floor for treasury bills. Cap and floor for both treasury bills and dated securities. There are no cap and floor rates in the scheme. Answer C. Cap and floor for both treasury bills and dated securities. What is the purpose of the ways and means? Advances overdraft provided by the Reserve Bank to state governments. To provide long-term loans to state governments. To help state governments with their day-to-day cash flow needs. To provide grants to state governments. To finance infrastructure projects in state governments. Answer B. To help state governments with their day-to-day cash flow needs. What is the primary goal of the Reserve Bank's Banker to State Government program? To provide ways and means advances overdraft to state governments. To increase the borrowing capacity of state governments. To regulate the flow of money to state governments. To provide grants to state governments. Answer A. To provide ways and means advances overdraft to state governments. What is the responsibility of the Reserve Bank of India, RBI? To design, produce and manage the nation's currency supply. To promote economic growth. To regulate the stock market. To collect taxes. Answer A. To design, produce and manage the nation's currency supply. Upgrading the security features of banknotes is an anti-counterfeiting measure. Who is responsible for this? A. The Government of India. The Reserve Bank of India, RBI. The Ministry of Finance. The Securities and Exchange Board of India, SEBI. Answer B. The Reserve Bank of India, RBI. What is the maximum value of notes that the RBI can issue? A. 5,000 rupees. 10,000 rupees. 15,000 rupees. Answer B. 10,000 rupees. Which of the following denominations of coins are in circulation in India? 25 paise, 1, 2, 10 and 50 rupees. 50 paise, 1, 2, 5 and 10 rupees. 50 paise, 1, 2, 5, 10 and 20 rupees. 50 paise, 1, 5 and 10 rupees. Answer B. 50 paise, 1, 2, 5 and 10 rupees. Which of the following denominations of banknotes are in circulation in India? 50 rupees, 100, 500 and 1000. 5 rupees, 10, 20, 50, 100, 200, 500 and 2000. 10 rupees, 50, 100, 500 and 2000. 1 rupee, 2, 5, 10 and 20. Answer B. 5 rupees, 10, 20, 50, 100, 200, 500 and 2000. Are coins issued by the Government of India legal tender in payment? Yes, always. No, they are not legal tender. Only if they are not defaced or have not lost weight. Only if they are of denominations of 1 rupee or higher. Answer C. Only if they are not defaced or have not lost weight. What is the maximum amount for which coins of any denomination not lower than 1 rupee are legal tender? 10 rupees, 100 rupees, 500 rupees, 1000 rupees. Answer D. 1000 rupees. What is the maximum amount for which 50 paise, half rupee, coins are legal tender? 5 rupees, 10 rupees, 50 rupees, 100 rupees. Answer B. 10 rupees. Can individuals be forced to accept coins beyond the limits mentioned above? Yes. No. Answer B. No. Is voluntarily accepting coins for amounts exceeding the limits mentioned above prohibited? Yes. No. Answer B. No. When did RBI introduce long-term repo operation, LTRO? March 2020, March 2019, March 2021, March 2018. Answer: A. March 2020. What is the tenor of term repos conducted under the long-term repo operation, LTRO? 6 months and 1 year. 1 year and 3 years. 3 years and 5 years. 1 month and 6 months. Answer: B. 1 year and 3 years. At what rate does RBI conduct term repos under the long-term repo operation, LTRO? Reverse repo rate, bank rate, policy repo rate, marginal standing facility rate. Answer: C. Policy repo rate. Which of the following financial instruments have concessions in the mark-to-market (MTM) guidelines? A. Corporate bonds, commercial papers, non-convertible debentures. All of the above. Answer: D. All of the above. Who manages the government's financial transactions, including raising resources from the public? A. The Reserve Bank, the Ministry of Finance, the Securities and Exchange Board of India, SEBI, the National Stock Exchange, NSE. Answer: A. The Reserve Bank. Which of the following is not a role played by the Reserve Bank as a banker to the central government? Maintaining the government's accounts, receiving money on behalf of the government, making payments on behalf of the government, providing loans to the government. Answer: D. Providing loans to the government. Which state governments can the Reserve Bank act as a banker to? All state governments. Only state governments that have an agreement with the Reserve Bank. Only state governments that are part of the Union of India. Only state governments that have a population above a certain threshold. Answer: B. Only state governments that have an agreement with the Reserve Bank. What is the role of the Reserve Bank in facilitating the transfer of government funds? To ensure that government funds are transferred securely and efficiently. To decide which government funds should be transferred and to whom. To provide investment advice to the government on how to allocate its funds. To audit the government's financial statements to ensure that funds are being used appropriately. Answer: A. To ensure that government funds are transferred securely and efficiently. What is the role of banker and debt manager to the government? Managing the government's foreign debt. Managing the government's domestic debt. Managing the government's trade balance. None of the above. Answer: B. Managing the government's domestic debt. What is the objective of managing the government's domestic debt? Raising the required amount of public debt in a cost-effective and timely manner. Reducing the government's domestic debt. Increasing the government's foreign debt. None of the above. Answer: A. Raising the required amount of public debt in a cost-effective and timely manner. What is the role of RBI in developing the market for government securities? Helps the government to raise debt at a reasonable cost. Provides benchmarks for other entities. Facilitates the transmission of monetary policy action. All of the above. Answer: D. All of the above. How does developing the market for government securities help the government? Helps the government to raise debt at a reasonable cost. Provides benchmarks for other entities. Facilitates the transmission of monetary policy action. All of the above. Answer: D. All of the above. What is the critical role played by RBI in developing the market for government securities? plays a critical role in developing the market for government securities. Plays a secondary role in developing the market for government securities. Plays no role in developing the market for government securities. None of the above. Answer A. Plays a critical role in developing the market for government securities. What is the primary tool used by RBI for effective supervision? A. On-site inspections. Off-site surveillance. Periodic supervisory meetings. All of the above. Answer D. All of the above. What is the name of the regime adopted by RBI for effective supervision? Risk-based management, RBM. Risk-based surveillance, RBS. Risk-based supervision, RBS. Answer C. Risk-based supervision, RBS, who oversees RBI's regulatory and supervisory responsibilities. A. Board for Financial Supervision, BFS. Department of External Investments and Operations, DIO. Foreign Exchange Department, Fed. Financial Markets Department, FMD. Answer A. Board for Financial Supervision, BFS. Which department is responsible for the regulation and development of the foreign exchange market? A. Foreign Exchange Department, Fed. Financial Markets Department, FMD. Department of External Investments and Operations, DIO. Answer A. Foreign Exchange Department, Fed. What is the role of the Department of External Investments and Operations, DIO? To regulate the foreign exchange market. To invest the country's foreign exchange reserves. To undertake sales purchases of foreign currency to ease volatility. To ensure smooth conduct and orderly conditions in the domestic foreign exchange market. Answer B. To invest the country's foreign exchange reserves. What are the three principles that guide the Reserve Bank of India, RBI, in overseeing payment and settlement systems in the country? Safety, efficiency, and return. Safety, liquidity, and return. Safety, security, and liquidity. Security, liquidity, and return. Answer B. Safety, liquidity, and return.